All right, welcome back for another episode of Carnivore Trades. Today is Tuesday, November 28th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So markets here today, basically flat again. So 45.50 pin until proven otherwise. Look at this close there, just 5 points above that level. And look at the last 4 days. So obviously last Friday was a half day, but still, you take out these little outlier, this little outlier and this little outlier here to 45.70. We've been stuck between 45.60 and 45.45 essentially for the last 4 days. That's really it. I actually talked about this morning in the short video, said 45.70 was going to kind of be the cap. Also told that to my traders this morning. In the trading room, by the way, we did have another winner today on Micron. So we bought that opening dip, nice little trade there. Did a short video on that too, if you want to check that out. But in any case, markets here in a very, very tight range, 45.50 pin until proven otherwise. So it's going to take an exogenous move to get us out of that range. And what I mean by that is, some type of, large put buyers coming in. Some type of a news. We did have a 7-year auction today, and that was, definitely on the weaker side. So that did kind of pull the markets in a little bit. You can see this pretty good fade, which actually came before the auction. So we had the, I believe it was the 1-year bill, and the market liked that, and then we ended up fading that whole move. But bond market kind of spooking the stock market out here. The problem is there's just no participation, right? Not enough volume here. We even tried to fade a little bit earlier in the morning, and then it just floated back up. Waller came out and said, soft landing. We're done hiking. Basically that's what he said. And markets floated back up and faded that move. But all in all, just a flat day. Spiders up 45 cents. Q's up $1. Up just 0.25% though. And then we do have some economic data. So I do think the market starts to wake up a little bit. I know it's, seasonality here. It's generally on the quieter side, but we are through the holiday now, at least Thanksgiving. We'll have Christmas coming up soon, but we have a few weeks to go until we get there. And we have GDP tomorrow, wholesale inventories, retail, and Thursday PC, and then Friday we got Powell. My guess is Powell wants to talk this down a little bit here. I know that Waller came out and kind of talked it up. I don't think Powell likes a 400-point move in a few weeks, but we'll see what we get here. As far as the charts are concerned, though, this level's still just kind of hanging in there. So that all-time high trend line is still holding on until proven otherwise. And again, it's coinciding with that 45.50 pin. So that's really the long and short of it. Again, I could say the same exact thing that I said last Wednesday about today. You get below this area, get below 45.40, then you could possibly start a corrective move here. You've got a pivot here at 45.25. There was some gamma sitting there this morning. We actually woke up this morning, and as soon as the market opened, there was negative gamma and delta for the first time since, you got to go all the way back to the 9th when we had that little, sell-off. That lasted all of a few hours. But again, the light volume kind of took over and we floated back up. But, then your next level is 4,500. Then, of course, the gap window and then your gap fill. You do have a gap fill up here at 45.76. I would consider that to be minor now, just because we've kind of based underneath it for a few days. And then really it's just up to double top. So 46.0770. So that's really it. So in any case, market sideways here, not a whole lot to discuss. But tomorrow we do start to get some more economic data out. Triple Qs here again, same kind of deal. Sideways the last 5 sessions inside of this green, no problems. If you do close below 386.05 on a daily, that would negate this green inside bar. And I would think that would open the door for a move back up to, back down to 378, which is a gap fill, and that pivot high, and then potentially 372. I know everybody thinks that the market can't pull back. It can, just be aware of that. Again, I'm not looking for big declines here, but I do think there is a potential to pull back into the first or second week of December, and then I think you'll kind of get the end of year flows to kind of take over. Not everything's going to pull back, but that, at least to me, right now, that's where I see risk reward being at the very least. Because again, even if, let's say we go up to double top here, that's about 5 points. It's exactly 5 points away. Your first support level on here is 10 and then 15 points. So again, we're closer to resistance than we are to support. Again, respect seasonality until we see volume come through here. Here's the bull's best friend right now is the fact that the volume is light. Look at this, including after hours right now, we're at 58.5 million. That's extremely light volume. So give the market the benefit of the doubt. If we do see a lot of volume come in, some big put buyers come in, then you can see us get unpinned from that level. But until proven otherwise, again, the market's just hanging in there. And we'll leave it at that. Anyways, Russell 2000, I continue to like this pattern here, down 40 basis points on the day, and actually had a pretty good sell early, rallied back, and then sold off again, and kind of closed kind of in the midpoint of the range of the day here. You can see like a minor little spinning top, but Russell 2000 is putting in a good pattern. So I like that setup on the IWM. Again, I talked about this yesterday. I'd like to see that 20 moving average kind of catch up the price a little bit more. Maybe even pull back, maybe a test candle, kind of like this one. But right now, that pattern is okay, and that does suggest higher prices going into the end of the year. It doesn't mean it'll happen right away. Again, you might consolidate for a little bit longer. But that pattern there on the IWM is not bad. The Dow here, again, getting overbought. We went into that 355 area, and we pulled back in off the highs of the day. You can see here on the intraday, little flat open, big up move, and then kind of faded into the bell. So a little bit of a tail candle there. Again, big thrust here without really any pullbacks outside of this little consolidation for a few days. So Dow getting a little stretched. Nice outside move though. Big thrust there on the weekly. But again, we talked about 355 area. And that's exactly where we went today and pulled back there. So again, we'll leave it at that for now. SMH did get dragged down today. This is another reason why I think we could start to see a little bit of a fade if this does break this gap window. Let's draw that in right now. So 159.52 right there. You get below that, I mean, that's going to take you down into this gap fill, and the semis tend to lead tech, and they also tend to lead the market here. So watch that level there. That was weak all day long. Actually was one of the only sectors that made a lower low. Take a look intraday there. And again, a lot of that was on the back of Micron. Micron did come off the low, still finished down 1.8% though. Nvidia as well, down 88 basis points. It got a little bit off the lows at the end. This was down over 1.2% for pretty much the whole day. So again, on the weaker side there, that did bring down the SMH, brought down the SOX. SOX did close back above this line. But again, watch that pattern. This can, roll over easily. We lost that breakup bar. Next level is your gap window here. And then, down to 3,600, maybe 3,550 as we talked about yesterday. So semis definitely on the weaker side and showing some weakness. IGV finished green on the day. That's still holding up really well. We do have some cloud earnings. Let me take a look here before I forget. Workday. So I'm glad I remember that. So Workday here, yeah, nice pop there for Workday. So, up about 7 points after hours. I believe we got CrowdStrike as well. So CrowdStrike, a big dip, and then right back to flat. And I think we have Intuit. That's right. So Intuit getting a little bit of a bid there. So that's helping out the IGV. They look okay to me right now. We'll see how those shake out tomorrow. Again, they could be up, down, all around after the conference call, and who knows what they're going to open at tomorrow. But a little bit of movement there in some of those cloud names. IGV up a little over 0.5% on the day. Again, just kind of hammering on that 382, 383 area. If we can get through that, I think I told you the next area, I'm just going to say 395, 395 to 400 there on cloud software. But IGV's still been a rock star here. A nice consolidation pattern and a nice bid. Going into the end of the year. Dow transports were a weak link today, but pattern-wise, this is still fine. So again, you kind of back tested the 50 and 20 essentially, and you came off of the lows here. Maybe a little bit of a test candle. Again, I talked about this yesterday. You did like 5 weeks of consolidation before breaking down. So generally speaking, it's going to take more than a week and a half to get through that. And it did back off pretty sharply. In fact, intraday, it was kind of ugly, for a while until we got down to that 1 o'clock time frame. And then we were able to come off the lows. But again, if this does more here, there's nothing to say this doesn't go to 15.6. So pattern-wise, it's fine, but definitely a little bit on the weaker side. I know the Jets here actually have a pretty good pattern as well. I'd like to see that do a little bit more consolidation, but Again, DJT, a little bit of a dip, but it came off the lows. And again, we'll see what we get there tomorrow. All right, let's get over to interest rates here. So the 2-year, again, we talked about this yesterday, talked about this last week. The short end of the curve is more bearish than the long end here. So inside bar pattern, picture perfect, right? That is picture perfect, playing out to a T. That's textbook. Big down move inside, sideways to up, and a thrust. So we're looking for 4.6 on the 2-year. You'd have the 200 MA right there at 4.65, but we're going to give it the downside bias to 4.6 because you have a pivot here and another pivot there. We know that is horizontal support. Again, I'm more bearish on the short end right now. We're looking for this 200 moving average here on the 5. There's a pivot here at 4.15 and then just below at 4.06. So right in this zone here where that 200 MA is, that's where we're looking for the 5-year to go. Look at this back test too, by the way. Inside bar, hitting that 20 MA yesterday and then right down. Here's the other end of it though. And I talked about this yesterday and the day before and so on. The 10-year, it was down, but only down 6 basis points here, right? So 10 on the 2, 12 on the 5, just 2 on the 30-year. So the long end is holding up better, right? We're seeing those yield curves, at least the 210, that's starting to uninvert a little bit here. The market's starting to see this happening and starting to sniff that out. 3-month 10-year, still not really doing it. But at least on the 210, seeing more of that uninversion. It doesn't always happen in a straight line, but again, getting a pop there today. Again, I don't see that as much downside, as I've said, in the 30-year. Again, maybe 4.4, right? 10-year. Yeah, we're there now. We're basically home. Maybe we could see a little bit more. Again, it could always overshoot. We'll just say, 4.25, right? Could always get down there. If it breaks lower, 4% is going to be an absolute wall. But right now, the downside is more in that short end, and that makes sense based on all the data we're seeing, right? But interesting dynamic there going on with yields, and they are pulling back. All right, XHB continues to hold up. Again, this pattern is still really good. Again, the only thing I don't like is that you just got these gigantic gaps here, and I'd prefer to see those moving averages catch up the price before evaluating it further. But pattern-wise, it is textbook. VNQ was down earlier and then finished up 0.2%. Again, this can still get up to 81.50, maybe 82, and that's really all I see for it in the near term. But it's definitely repaired itself, and we'll give it the benefit of the doubt there. XLF down just a penny on the day, nothing terrible. I think KRE and KBE are kind of intriguing here. Again, those patterns are textbook. They look fine to me as well. I think they can go higher with a little bit more consolidation. XBD down 1.2, so that did roll over pretty precipitously. Actually closed right at the lows of the day, so broker dealers took a little bit of a hit. Again, no real problems though. Can still go lower. You just don't want to see it break 480. But outside of that, it's fine for now. Here's the weird thing. So crude up 2% on the day with bonds selling off, right? Or I should say with bond yields selling off, right? So bonds getting a bid. All the economic data pointing to a slowdown, and crude was up 2%. Is this just because of the OPEC meeting? It's certainly possible. That is on Thursday. So a little bit of chop shop there. But, this morning, look at this. This is what crude was doing while the market was pumping, while bonds were pumping. Crude's pumping with it. Is it contradictory? It's possible. I don't know if we can make too much out of it. Again, levels are still the same. You get back above this blue trend line, then things change and become bullish for oil. I still think it's kind of bearish down to $70, maybe 69. XLE got a nice bid today, but then came way off the highs here. Again, a lot of resistance still at 85. Keeps hitting on it though. So, if you break through it, you hammer it enough times, you break through it, you can get up to 87.50. Again, nothing to do here with the XLE right now. Same thing with XOP, OIH. Leave them alone. Let these patterns play out and let them give us something more clear here. They're just too choppy to really do anything with right now. CCJ holding up okay, down 20 cents on the day. No problems. Again, we'll still just say 50 for that one. And then URNM can go back to that 52 and change double top. Nat gas, a lot of things had rollovers today. This was one of them. Contract gaps, that is. Basically going up to the 3 handle and then rolling over, no pun intended, basically back to the gap fill. We'll see what this does by the end of the week. But again, another kind of gap up and then fill. I want to see how this one plays out going into end of weekend and end of month. Dollar index here, so that did finish lower. So we are looking at 102.50 for this. It actually got very close today, 102.61. So that is going to be your 618. It's also where we broke out of previously on the DXY. And then past that, it's, you know, really like 101.50. But we'll see if we can get a move here. Again, I didn't really like the 103 handle. I talked about 103 handle when we were up here. And then what happened? We bounced for a few days and I said, you know, it's not the greatest now because you've already bounced. So we did slice through it. So I think 102.50 maybe gets hit tomorrow. It's not that far away. Maybe you pierce that 618 by just a little bit, but we'll see what kind of price action we get there. And then again, coinciding with that 101.50 area, you've got this trend line here. So we'll be watching that as well if and when we get down there. But we'll see if the dollar gets a bounce there. If it does, you know, I expect it to go up and retest, you know, 104.30, maybe 105 on kind of some, you know, kind of a more outside move if we get a bigger bounce there. All right, so precious metals were the star of the day, really. So gold being a rock star. Again, another thing that had a contract gap, but it was still up 1.4. If we look at GLD, again, this doesn't reflect the contract gap, so still up 1.3. There is a gap to fill, so just be aware of that. But I mean, what can you say here? Basically, almost at all-time highs. This is interesting to me, right? So the market's like rejoicing that, you know, Waller is talking rates down. I don't know if gold being at all-time highs is bullish for stocks, but maybe it is in the short run. I don't know. Anyways, we'll examine that further. But gold acting well here. You've got your next level. You're at 2085. Silver here up 1.5. So pushing through that trend line again. You got a gap to fill. Just be aware of that. But nice trend line break there. We're not even back to 2% inflation, and the market's front running a Fed pivot already. That's kind of what I'm saying here. Platinum up 2.74, so that's still acting well here. I don't think this is quite ready yet. I'm still watching this one for a pullback, so I do think the low is in. Palladium here a little bit on the softer side. Again, I like this one least of the four, but you know, it's holding up. I'd like to see a higher high here. If we can get above 11.15, I think that kind of seals the deal, especially on a weekly close. If you get above 11.3850, then I think this can really take off. But pattern wise, not the greatest. I do like that tail in the end of the month with heavy volume though, so I'll say that much. Also copper here, again, basically telling you, you know, market's front running a Fed pivot, right? Pullback, big pop. And right into that trend line. So again, we'll see. Again, you got a gap to fill, but nice pop there. And then we'll see where the weekly close will tell us a lot more. If we close above that, you know, then it turns bullish here in the near to medium term. All right, Bitcoin's still hanging in there really well. Actually, pattern looks strong at 38,000, almost making new highs. You know, kind of got like an inside bar there at the highs. Again, nothing's changed on this. We'll be interested to see how that monthly Bollinger Band looks going into next month. It is still pointing down, but you know, price is holding up well. And again, everything I've been saying recently, nothing's really changed on that. And I'd still give it the upside bias to 40K at least. So Bitcoin holding up. All right, lastly, again, so again, right now, 45.50 pin until proven otherwise. That trend line is still holding. I would say the gap fill, maybe that's an intraday level, but I would say it's minor on a daily basis right now. Your bigger level is double top. If we do start to roll over, again, 4,500 is going to be a big area. If you get through that, then it's down to this green bar low here, and then obviously we'll go from there and we'll look at the gap fill and so on and so forth. You have the 20 moving average and all that other good stuff in there. But I think if they're going to move this lower in any sort of significant way, it's going to be in a gap down. I don't think you can do it intraday because then you're going to get too many shorts jumping on board. Like, you don't want to do this and then push down. There's too many shorts are going to jump on board. You need to trap buyers up there if you're going to do it that way. You could even see like kind of with the Qs, you know, if you could trap, like if you could gap down to here and break that low, you just trapped 2 weeks worth of buyers, right? So That's kind of the psychology I've got behind it. Same thing with the semis. You get below this line here, you trap all those buyers, right? So that's how I would do it if it's going to happen. And again, like I said, we do have the economic data coming out. So there is that precedence for it to happen. Again, doesn't guarantee anything happens. But again, just be careful in this environment. Don't force anything while the volume is light. Let the market show you its hand first and then react from there. So anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all tomorrow.